All right. All right. So what we were discussing is so you have expansion. Market expands from a floor, creates a ceiling, right? Comes down a little bit. So you're gonna have this initial ceiling, and then down here you're gonna, let's just say that this is a floor. And then what we're really looking for is an expansion through that ceiling. If we're talking about bullish, then we want to see price break through that. So we're talking about step one basically. We want to see price break through that ceiling. So that's the BOS. You with me there?
Yep.
All right. So then wherever the market tops out at, creates that bullish bearish scenario. That's your ceiling. And then down here would be the what?
Cool.
Yeah. So again, if we go from here to here, we count from the bottom to the top, from 1 to 10. 1 to 10, what would that be?
Range.
That'd be the range, right? So we go, we can throw some numbers in here. 2, 3, 4, 5, 6, 7, 8, 9. That's a range from 1 to 10. The bigger the range, the bigger the opportunity.
Yeah.
So all ranges are not created equal. All ranges are ranges, but they are not all created equal because the bigger the range, the bigger the opportunity. Because if we buy at 1, then we can sell at 10, we can make $9, right?
Yep.
But say that range was 1 to 5, then that means we can only make like $4.
Okay.
Or say if that range from 1 to 3, we can only make $2.
Yep.
And how you identify that is really the size, the distance of the range. And we're gonna look at that on the chart because you already had some up, and we'll take a look at that. So that makes sense so far, right?
Yep.
Now there are at the top of the range, we don't really want to be a buyer because like that, we would consider that how do I want to do this?
That's premium, right?
That's right. That's premium. So we don't want to be a buyer. I'm just going to draw a line in the middle to make this, put this here, and I'll make it orange. Let's say this is the middle of the range.
Okay.
Isn't it about the middle? It looks like it's about the middle.
Yeah, they're about the middle.
Bring it down just a little bit. Let's say this is the middle of the range. In the middle of that range is basically is called equilibrium or 50%.
Okay.
So anything above that would be considered what?
Premium.
Yeah. So anything above this area is going to be considered premium. So what this does is tell you really quickly whether you should be selling or buying or not doing anything.
Yep.
So if I were looking for sales, then I would be selling from a premium. And then if I were looking for buys, I'd be looking for
Discount.
a discount. Yep. Below 50% is a discount. Above 50% is a premium. And if you can look at the market in that way, in this way, every single time, it gives you a basis to make good decisions. Because ultimately, we are in the business of making decisions. It's not just trading. We're in the business of making decisions, and we want to make good decisions. And this is a framework to do that on a consistent basis.
Okay.
Now, this range concept can be applied to any time frame. It can be the monthly, it can be the weekly, it can be the daily, it can be the 4 hour, it can be the 1 minute. It can be the small. I mean, there are 15-second, 5-second charts out there. There are even less than that, and it can be applied to that too. Because the markets are fractal, and this is happening all over and over. It's happening on everywhere on the chart. This concept is happening.
Okay.
But we want to make sure that we get big ranges. So if we wanted to get big ranges, we want to participate in a 4-hour range. We want to participate in a daily range or a weekly range because that's going to give us a big move.
Okay.
It's also going to give us the predominant, if the market is moving in waves, it's going to give us the predominant direction and it's going to give us where the big dogs are moving this thing, right? So if it's moving in waves like that on a monthly or a weekly or a daily, we really want to get in line with that because that's where the real money is flowing. That makes sense?
Uh-huh.
All right. So that being said, it's very easy to spot where you should be buying, where you should be selling, and so forth. Now, I'm going to draw one more thing here because when we go on the charts, I don't want it to trip us up. So here, here. If we were just saying, hey, we want to buy when it breaks above, when it give us a break of structure, because there is going to be a point. Because we're going to use smaller time frames to actually get into these trades, but we're going to use the same concept. It's okay to buy once this happens, as long as you know where to put your stop loss. So, hey, I'm going to buy right here. My stop loss are going to have to go under the floor.
Okay.
You with me on that?
You say under the floor.
Under the floor, because that's where your protection is. Because like buyers, if the big dogs are buying the market, they don't want the price to drop all the way back down here.
I got you. Okay.
So that's where your stop loss needs to go. But we're looking for that. We're gonna get into right now we're focused on these on the range, which is this is step 2. Step 3 is, we talked about imbalance a little bit, and then step 4 is confirmation. But we're going to be looking for that step 4 is going to be, we're going to be looking for this confirmation and a discount. But we'll get into that at another time. But right now we want to cover this concept. So now what I'm going to have you do is reshare I'm going to stop sharing this and then reshare yours so that we can look at what you had there. And I'll just kind of mark it out. All right. So now, if we're looking at it, and it's red, I'm gonna use, I'll use yellow. Okay, that's good. Now look at this from this perspective. This is a break of structure right here, right? See, price went up here.
Yep.
And then it turned red, and then here was the low. So that's a range right there.
Okay.
So you see how price went up like this, came back down, and then it went up to that high. Because the whole point of the range is to have price do this, create a range, pull back into a discount, and then take out the high to continue to go up.
Okay.
So when we're looking at this right here, if we're on a 1-hour time frame, I'm gonna have you. Well, we're actually we're just talking about ranges right now, but we're gonna get into the confirmation. But if we were to look at the distance between here and here, we can probably see that that's probably here to here. How many pips is that? Like
about almost
20 pips.
Uh-huh.
So think about it. Is that a big range?
It's not.
It's not. So it's not a lot of pips. There's not a lot of pips to make out of that. So then we move on to the next one and we say, if we're talking about just this range itself, but look at this, here's a break of structure, here's a high point. So now if we look at this and we say that this is a range, see how price came into a discount?
Uh-huh. It came deep into the two.
Deep into the discount, right? So it came below the 50%, and there was an opportunity on a smaller time frame to get into this trade. But now if we look at this range and we say, hey, we know that price can come back to the top. We want to look at what is the from here to here. How much is that range? How many pips is that? Roughly?
Like about 70 or 60.
Right. So you see how having a big range makes a difference?
Yeah.
Because most times most times you're not going to get um you don't have to get the absolute best price. You don't have to get the absolute low of the range to make money in it, but we do want the bigger the range, the easier it is for us to trade it overall.
Okay.
Because fluctuations in the market, if you got a 20 pip range and you only gonna get 10 of that, I mean you gotta be precise.
Yeah, exactly.
Or you even gonna get 7 of that. You got to be super precise. You got to go down to a small time frame and time it. But the bigger the range, if this was 125 pip range, then it would be even easier to get something out of it.
Okay.
So,
So if I went to another, say 30 minutes,
hold
that's
on.
when you okay.
Hold on. I want you to. I know what question you about to ask. So we're gonna focus on this area, and I don't know. Put a well, you got the circle on it. So let's go to a 30-minute time frame and look at that. And then I want you to ask the question.
Okay. Okay. So now you see how my breaks and everything doesn't really line up, right?
Right.
What I had. So I'm guessing. Uh, so what would I for that same range that we just had? Okay, it's right there.
Yeah, so if correct me if I'm wrong, you're thinking about how would you get into this trade, right?
That's exactly what I was trying to get to. Yeah.
So don't we'll get into the confirmation piece, but what I want hopefully I can give you summarize the thinking I hear that's happening. When all of the planning is done on a bigger time frame.
Okay.
Execution is done on a smaller time frame. So if we are looking at a big wave, let's say, let me draw it this way. This is a big wave on a daily time frame. This is the 4 hour, and let's say this is the 1 hour. So if we trying to get into this wave on the 1 hour, then we're gonna go to a smaller time frame, like a 30-minute. We'll plan it on the 1 hour, figure out what our range is on the 1 hour, right? And then go on a smaller time frame and get into that to ride that range up.
Okay.
So that's a confirmation piece of how do you get into it. So when you're marking this chart up, you're not worried about all these breaks on the inside of this are internal, of internal of what's happening externally.
Okay.
So you won't have, now that we cleared that up, from what we talked about earlier, you'll just have a line up here, you'll have a line down here, you'll be waiting for price to come down to a discount, go into a smaller time frame and get in to continue up. None of these other lines will be present.
Okay, yeah. I got you.
Yeah. So that's how we're gonna clean up the thinking. But while we're here, let's go look at the same thing and go to the 5-minute chart. Now you see how it's looking now?
Oh yeah.
So think about, you got this already marked off. You already know where your first target, your first take profit can be, and price comes down into it. We don't want to buy from up here. It's not at a discount. We want to buy from down here. So the confirmation is going to come from here. Stop loss go under here, and you get to ride this all the way up.
And that thing is right there in the middle too. Like perfect.
Yeah, yeah. It is there's an algorithm. It can be extremely precise. This is the level of precision of where we're going, but right now we're just getting these, strengthening your foundation step by step. So the first thing we did was make sure that you understand this breaker structure thing.
Yeah.
And breaker structures, support, resistance, floors, and ceilings. And then step 2 is, how do you identify a range?
Okay.
A big range. And then we're going to move into refinement, because the refinement, so BRR, the refinement piece is going to help you identify where price is likely to pull back, because on the morning calls, which we're working up to, you will already know that price can pull back to this area by the third step. So when it price reaches that third step, we're just waiting on the fourth step, which is a confirmation, which is ultimately, we're looking for it to continue to go up.
Okay.
So,
so do you want me to practice on the higher time frame, the ranges?
yep, that's the next step. So now we're gonna have you're gonna go to, you can do the 1 hour, you can do the 4 hour, but you don't have to mark off each little break. What you're looking for is that, go back to 1 hour. See how you got all that, and I want you to clean the chart up too, and just start fresh. But let's say right here, here's when price breaks that, this is the high, this is a low. See how price came down a little bit? It come back, you know what I mean? Like it didn't. I mean, that's probably right at 50% of this range, close. You see that? Let me draw it. Let me probably if you clear this stuff out, you'll be able to see it better. Okay. So you take your highest point. When the price breaks above that, that's your BOS, right? Step one.
Yep.
So then this candle right here is the one that caused the BOS, and this is the highest point. What's the most recent lowest point? Right here. So this is the high of the range. This is the low of the range. Notice how price pulled back.
Yeah.
Right here, kind of midpoint of that range. So from here to here is that's probably like midpoint, right? So it just went into the discount from here to here, just tapped into the discount. And what did it do? Take off like that.
Take off like that.
Yeah. So I'm gonna have you do that on a 1 hour chart, and you can go back on that 1 hour chart and find some, but just focus on like bullish range. I'm looking for a bullish range. I'm looking for a step one, and then step one that creates step two, and then just outline what the high is and what the low is, and like what the high of the range is, what the low of the range is, and that's all I want you to do right now.
Okay.
Yeah. So I'm gonna